As the market pops up on 14th February 2020, we observe that there is a clear dichotomy between the government and the Reserve Bank of India on cryptocurrencies. The revenue-hungry government chosen it appropriate to tax trading gains on cryptos at 30% the budget. The Reserve Bank governor has gone on record that the cryptos don't have value, even that of tulips. Was he referring to the value of tulips in the 1630s or during the period 1634 to 1630? History has recorded this period as the tulip mania, when the tulip bulbs were sold in Holland for 10,000 guilders. And mind you, with that money, you could have bought a palatial mansion. Those post 1637, the tulips steadily lost value, leaving many speculators in peanut. The monetary policy has been a non-event, though the governor has stated that India is starting a different course of recovery without elaborating on it. In the US, the inflation touched a 40-year high of 7.5%, taking along with it the sovereign 10-year yield to 2.05%. In early morning trades on Friday, the benchmark bond is trading around 2% yields. The NASDAQ 100 as well as Brent crude have remained static week over week, while gold has risen to $1,828 per ounce. China and Russia have chosen to play the Winter Olympics as a political stage and a sports event. During the week, rupee slipped to 75.36 against the dollar. The FIIs continue to remain net sellers, and the cumulative outflow during this month is touching closer to 10,000. In the coming week, the rupee might attempt to claw back to the 75 levels, considering the buildup in reserves going up from 630 to $632 billion for the Friday weekly statistical supplement released by the Reserve Bank of India. The Nifty oscillated during the week, but week over week, it has recovered to restrict its losses to less than 1% from the previous week's level. Derivatives volatility was also steady, VIX remaining stay put at 18.8. The stock of SBI Life Insurance at 1,133 is reflecting a bullish engulf. A rebound is corroborated by its MFI money flow index falling below the 30% level. The sovereign 10-year Indian bond yield after the monetary policy announcements softened by 18 basis points to 6.70. And the 10-year, 3-year IRS also softened by 20 basis points to 5.47%. However, considering the announcement in the budget of the government's gross borrowing to be close to 15 trillion Indian rupees, there is little comfort for a sustaining of the uh, debt market yields or the interest rates per se in the Indian market. Many have cautioned that the US Fed as well as Reserve Bank of India are falling behind the curve. Does it sound cautious for the central bankers to draw comfort that the one who is in front is likely to get more hurt at the curve? Have an interesting week ahead.